IPSAS 1, presentation of financial statements and public sector accountability. If you are sitting for ICAN, ACCA, or any professional accounting exam, this standard is your foundation. Today, we are not just skimming the surface. In this master class, we are going down every line of IPSAS 1. So, what is objectives of IPSAS 1? Objectives of IPSAS 1. IPSAS means International Public Sector Accounting Standards. So the mnemonic IPSAS means International Public Sector Accounting Standard. IPSAS 1 ensures general purpose financial statements are comparable. The primary objective of IPSAS 1 is to ensure that general purpose financial statements are comparable. IPSAS 1 applies to all public sector entities except government business enterprises. Those guys use IFRS. Government business enterprises uses IFRS. Aside the government business enterprise or enterprises, so we apply IPSAS 1 to all public sector entities. Accrual basis. What are accruals? Accrual basis. Accrual basis. This standard is for accrual basis. IPSAS 1 is for accrual basis. If you are reporting on cash basis, this is not your standard. If you are reporting on cash basis, IPSAS 1 is not yours. So I will use the mnemonic COMAX for the presentation rule. COMAX. Mnemonics. So that is presentation rules. Presentation rules. So the mnemonic is COMAX. Mnemonics is COMAX. That is the mnemonics for presentation rule. C stands for consistency. C for consistency. Consistency. Consistency means you should keep the same presentation every year. Same presentation everywhere, every year. That is, once a policy, once a principle has been chosen, that principle must be applied from year to year. Keep same presentation every year. That is consistency. The letter O stands for offsetting. O for offsetting. Offsetting. That is, offsetting means no netting of assets and liabilities. No netting off. You are not allowed to deduct liabilities from assets. No netting off. Items of liabilities should not be deducted from items of assets. I mean, when you are recognizing, when you want to measure an element, I'm not talking about the net asset. That is not what I mean. So if an element, for instance, salaries accrued, is a liability. Salaries prepaid is an expense, is an asset. You are not allowed to deduct the salaries accrued from salaries prepaid, because salaries prepaid is an asset. Salaries accrued an expense. No netting off. That is what we mean by offsetting. Salary prepaid should be recognized under current assets, while the salaries accrued should be recognized under current liability. The next letter is letter M, which stands for materiality. Materiality. That is the presentation rule. Materiality means you should group small things, separate the big ones. Those things that are of small value, group them together. Those ones, that is, those ones that are of small value, recognize them as an expense. Those that are of higher value, whose values are very big, recognize them as an asset. So that is what is meant by materiality. An item is material if the omission or misstatement will distort the view represented or presented in the financial statement. The next letter is letter A, which stands for aggregating. Aggregating or aggregation. Aggregation or aggregating. That is, combine similar items for clarity. Similar items should be grouped. You total them. That is the meaning of aggregation. Then the next letter, I'll consider M, I'll consider A. The next letter is G, which stands for going concern. Going concern. Going concern. That is letter G. That is, you assume entity lives on. You prepare your financial statement on the assumptions that the entity lives on. That is, entity will continue in the foreseeable future. It's not, you don't prepare the financial statement on liquidation basis. You should not assume that the entity is going to die a year to come. You assume that the entity lives on. That is going concern. Then the next letter, which is the last letter, is letter S, which stands for selection. Selection. Selection means choose and apply accounting policies correctly. Accounting policy should be chosen and applied correctly. So these are the presentation rules. I want to examine the 6 components of financial statements in accordance with IPSAS number 1. Under IPSAS 1, a complete set of financial statements is not a balance sheet. It includes 6 specific items. Number 1, we have statement of financial performance. Statement of financial performance. Two, statements of financial position. Three, notes to the financial statements. Four, statement of changes in net asset. Statement of changes in net assets or equity. Number 5, cash flow statement. Cash flow statement. Number 6, statement of comparison of budget and actual amount. Comparison of budget and actual amounts. My lecture shall cover the first 3 in this video. The other 3 will be covered in separate video. Though I have a video on cash flow statement and IPSAS for comparison of budget and actual amounts. I have videos on number 5 and 6 already. So I'm starting with statement of financial performance. Statement of financial performance similar to statement of profit or loss for a trading entity. It focuses on revenue and expenses. Statement of financial performance focuses on revenue and expenses. It is prepared to ascertain the surplus or deficit for the period. Statement of financial performance is prepared to ascertain the surplus or deficit for the trading period. So we have surplus where revenue exceeds expenditure. So that means you have revenue, statement of financial performance. Statement of financial performance is a statement that shows revenue less expenditure or expenses. So If you deduct the expenditure, you arrive at surplus or deficit. Surplus or deficit. We have deficit where revenue is lower than the expenditure. That is where expenditure exceeds revenue. But where revenue exceeds expenditure, you have surplus. So we prepare statement of financial performance to ascertain the surplus or deficit for the trading period. So I want to give you the comprehensive format showing the statement of financial performance. Format of statement of financial performance. We have a state, government, statement of financial performance, for the year ended. December 31st, 20XX. So, in preparation of statement of financial performance, the starting point is the items of revenue. For our purpose, we shall categorize revenue into two. So we have revenue from non-exchange transaction. So we have revenue from non-exchange transaction. Revenue from non-exchange transactions. Revenue from non-exchange transactions. This is revenue government gets for free. Revenue government gets for free. No direct trade. There are revenue government gets for free that does not involve any direct trade. And for this, we will use the mnemonic grab T. Grab T. For this, the first letter G stands for grant. So we have grant. That is government grant. The letter R stands for recoveries. Recoveries. So under recoveries, we may have fines. We may have fines. We may have penalties. Then that is for letter R. Letter A stands for aid. Aid in form of donations. The various forms of donation fall under these categories. The letter B stands for bequest. Bequest. That is in the form of legacy gifts. So that is letter B. The T stands for taxes. T stands for taxes. Revenue from various forms of taxes like VAT, income tax, etc. Value added tax, income tax, all various forms of tax forms fall under these categories. Duties, import duties, export duties, the various forms of tax. That is revenue from non-exchange transaction. The second form of revenue is revenue from exchange transaction. Revenue from exchange transaction. For this, we shall use the mnemonic SEL. That is the mnemonic we will use for this form of revenue. The first letter S stands for revenue from sale of goods. Revenue. S stands for sales of goods. Revenue from sales of goods. Then the letter I stands for interest. Interest, dividends, they fall under these categories. Dividend income, they fall under this. Interest income or dividend income. The letter R stands for rendering of services. Revenue from rendering of services. Revenue from rendering of services such as tolls, hospitals, fuels, all revenue from these various sources. When you sum up these, you have the total. So we now add the two forms of revenue. Remember, we have two forms of revenue. Revenue from non-exchange transactions, and the second one is revenue from exchange transaction. When you sum up this, you have the total revenue. Total revenue. From our total revenue, you less the expenses or expenditure. We want to deduct the expenses or expenditure. Less expenditures. For expenditure, I will use the mnemonic spaced. The mnemonic I will use for expenditure is spaced. That is the mnemonic, spaced. The first letter, S, stands for salaries and wages. Salaries, wages, pension. That is the various forms of personnel costs. That is letter S. Letter P stands for payments, transfer payments. Transfer payments. Transfer payments. That is letter P, transfer payments, such as grants to individual or other levels of government, such as grants to individuals, grants to other levels of government. So that is letter P. Then after P, we have A, amortization, or depreciation. They fall under this category. Then after A, we have letter C, which stands for consumables. Consumables. These are expenditure. Consumables. Consumables. After letter C, we have letter E, which stands for other external. E, external. In the form of operating expenses. Operating expenses. They fall under this category. The various forms of operating expenses, such as contracted services, repairs, and maintenance. D stands for debt. That is the last letter there. Debt. That is your finance cost. Finance cost. The interest expense. Or interest incur. Interest expense. So when you add all the expenses, you have this as the total. We now subtract the total. We now have surplus or deficit if it is negative. Remember, I've told you we have deficit, where the expenditure exceed revenue. But where revenue exceed expenditure, you have surplus. You have, let me say, accumulated, surplus, or deficit brought forward. We have accumulated, surplus, or deficit carried forward. This is the format for preparing the statement of financial performance. After statement of financial performance, we have statement of financial position. Statement of financial position. Statement of financial position, commonly known as balance sheet, is a statement that shows the assets, liabilities, or equity of an entity as at a particular date. So, if you like, you may use order of liquidity. You may use order of liquidity in your presentation. If you are using order of liquidity, that means you start with your current asset, the most liquid asset first. You start with your current asset, cash in hand, cash at bank. So your receivables, your prepayments, and others. You start with that. That order of presentation is called order of liquidity. If you start with the order of permanency means you start with the most permanent asset by starting with the non-current asset first. Your property, plant and equipment, intangible asset, investment property. So when you use that order of presentation, we call that order of permanency. So whichever form of presentation you use under exam condition, both forms of presentation are acceptable. So if you have watched my earlier lecture on IPSAS 1 and you are coming across this, if my order of presentation varies or differs, so I've told you both methods of presentation are acceptable. But I want to use the order of permanency in this lecture because of the knowledge you have acquired from your financial reporting, so that it can be brought forward to this. So we have the statement of financial position. We want to look at the format of statement of financial position. I've told you we want to start with the most permanent assets. Start with assets. Your first asset is your non-current asset. Non-current asset. As part of our non-current asset, we have property, plant, and equipment. Under this heading, so we have land and building, we have furniture and fittings, we have plant and machinery, we have motor vehicles, etc. Those one falls under the property, plant, and equipment. So then after property, plant, and equipment, we have investment property. Investment property. Then after that, you have intangible assets. Intangible assets. Then you may also have financial assets. Financial assets. So you have the total of the non-current assets. This order of presentation is called order of permanency by starting with the most permanent asset first. After this, you have your current assets. As part of your current asset, you may have inventories. Then you may have receivables. We could have receivables from non-exchange transactions. Then you could have receivables from exchange transactions. From exchange transactions. I will still make a video on IPSAS 23 and IPSAS 9. So, then you could have prepayments as part of your current assets. Prepayments, then you may have cash and cash equivalent. Cash equivalent. So when you sum up this, you have the total assets. Then after total assets, the next section will be the net assets stroke equity. Net assets or equity. So it means, if you like, you may say you may call that equity, and if you like, you may say net asset. So we are starting with net asset or equity. So under this, we may have capital contributed by other government entities. Capital contributed by other government. Then after this, you could have accumulated surplus or deficit. Accumulated surplus or deficit. This is obtained from the statement of financial performance. You could have reserves such as revaluation reserves. You have the total net asset or total equity. After this, the next section could be the non-current liabilities. Non-current liabilities. You could have long terms borrowings. You may also have long-term provisions. Total. After the non-current liability, we may have current liabilities. Under long-term liabilities, we may have under current liabilities, we may have provisions. Payables. And the payables could be payables from non-exchange. Payables from non-exchange. Transactions. We also have payable from exchange. Then we could also have short-term provisions. We may have accruals. So when you sum up the current liabilities, you have this. You add the net asset plus non-current liabilities plus current liability. You have total equity and liabilities. Total equity and liabilities. Having examined the format for statement of financial performance and the format for statement of financial position of a public sector entity under IPSAS 1. This question is obtained from ICAN November 2025. Public sector accounting and finance question number 1. Tadepe state government is one of the 26 state governments of Federal Republic of Wazobia. The state government adopted treasury single accounting direct method and prepares its accounts using IPSAS accrual basis.
There have been widespread rumors of fraud since the retirement of the Accountant General of the state about 2 years ago. However, the rumors were not substantiated by adequate information. The Commissioner of Finance of the state invited you to his office as the new Accountant General of the state and handed over some of the financial data from Treasury Department to you as detailed below. The trial balance for the year ended December 31st, 2023 is as follows. We have the debit side and credit side. Amount is in million naira. Property, plant and equipment, motor vehicles of 15 million, 15 billion, 6 million is at the top. Land and building, land is 15 billion and the total value is 60 billion. Furniture of 1.5 billion, equipment of 7.5 billion, plant and machinery of 15 billion, receivables comprises of rates of 300 million, licenses and fees of 180 million, rent of government properties of 150 million, prepayment, insurance 24 million. Then we have inventories, office stationaries of 12 million. We currently have cash and cash equivalents of 48 million naira. Accumulated provision for depreciation of property, plant and equipment comprises of motor vehicles of 3 billion naira. Buildings of 6 billion, furniture of 108 million, equipment of 75 million, plant and machinery of 1.5 billion naira. Then we have accrued expenses, which comprises of consultancy of 45 million, utility bills of 27 million, capital grant from the federal government of 450 million, reserves of 90 million, accumulated net surplus or deficit of 1 billion 491 million. And the total is 101 billion 205 million naira. The following transactions took place in the office of the Accountant General for the year ended December 31st, 2024. 1. Listed below are the revenue and expenditure items for the year ended December 31st, 2024. Amount is in million naira. NCOA, description and million. Code number 30040, personnel emoluments of 55 billion 230 million. 30050, Ministry of Finance, which is 39.3 billion. 20030, licenses and fees of 390 million. Code number 20050, rates of 450 million. Code number 20060, rent of government properties of 480 million. Code number 20040, sale of land of 234 million. Code number 30060, and that is Ministry of Education, of 132 million naira. Then we also have code number 30030, consolidated revenue fund charges of 318 million naira. Code number 20010, statutory allocation from federal government of 148.5 billion. Code number 20020, state internally generated revenue of 24 billion 690 million. Code number 20080, other grants of 1 billion 680 million naira. Code number 20070, share of value added tax of 72 million naira. Then we also have code number 30020. We have Office of the Secretary to the Government of 99 million. Code number 30070, Ministry of Health, 261 million. Code number 20090, miscellaneous receipts of 183 million. Code number 30080, agriculture and water resources of 126 million naira. Code number 30090, we have Ministry of Works and Houses of 6 billion 438 million naira. Code number 30100, and that is Ministry of Commerce and Industry of 140 million. Code number 30130, other charges of 33 million. Code number 30120, miscellaneous of 654 million. Code number 40000, capital expenditure of 786 million. Code number 3110, Ministry of Local Government and Chieftaincy Affairs of 42 million. Note 2. Code 2 is used as prefix for revenue. Code 3 for recurrent expenditure and 4 for capital expenditure. Note 3. Preliminary investigations carried out revealed the following irregularities which occurred and were discovered within the year. First asterisk, included in payments of expenses of the expenses under Ministry of Health were various duplicated vouchers amounting to 21 million naira. Second asterisk, there were some falsifications in the bills for items bought for the provisions of water under other charges. The total discrepancies amounting to 9 million naira. Note 4. The following agreed revenue demand notices were sent to the EDGs of the state during the year. We have details and the amount is in million naira. So we have local licenses and fees of 450 million, local rates of 555 million, rent on state government properties of 560 million. Note 5. Included in the payment under works and housing is the cost of motor vehicles of 75 million naira, while medical equipment costing 105 million naira was included in Ministry of Health expenses. Note 6. We have included in the payments under works and housing is the cost of land, including construction of access road certificate of occupancy, etc., amounting to 300 million naira. The land was acquired by the state government and sold to local prospective landowners at a cost of 1,560 million naira per plot. The land consists of 200 standard plots for the construction of houses of their choice. Only 150 plots were fully subscribed and paid for during the year. Note 7. Included in the payment under Ministry of Finance is the cost of office stationery of 75 million naira, while the value of office stationery based on inventory sheet as at December 31st, 2024 was 19.5 million naira. Note 8. Capital grant from the federal government was received on December 31st, 2023 and utilized in 2024. Note 9. The capital expenditure paid during the year was for the acquisition of land for the new State General Hospital. Note 10. Some of the accounting policies for depreciation adopted by the government include the following depreciation rates.
We have the depreciation rates are in percentage. We have motor vehicles of 20%, building of 2%, furniture 10%, equipment 15%, plant and machinery of 15% as well. Note, all non-current assets were purchased at the beginning of the year. Note 11. The following expenses were incurred but not settled as at end of the year. Amount is in million. Consultancy, which is finance department, 45 million. Utility, which is other charges, of 18 million. We have repairs and maintenance of, and that is works and housing, that amounted to 27 million. Salaries and wages, personnel department 69 million. Insurance, finance department 16.5 million. You are required to prepare A, the journal entries to record the loss of funds. B, the statement of financial performance for the year ended December 31st, 2024. C, the statement of financial position as at December 31st, 2024. So we want to start with the A part of the question, the journal entries to record the loss of funds.
The name of the state is Kadikpe State Government. Kadikpe state government. And we have two loss of funds identified. The first one is included in the payments of the expenses under Ministry of Health were various duplicated vouchers amounting to 21 million. So, if there were duplicated vouchers under Ministry of Health of 21 million, that means the expenses for under Ministry of Health, because you were told it is an expense, under Ministry of Health were inflated by 21 million. Remember, expenses normally should have a debit balance. Since it was inflated, you will need to credit the expenses under Ministry of Health. You credit Ministry of Health expenses with 21 million naira in order to reduce the expenses incurred by Ministry of Health. Then the second asterisk. So I've told you, you credit 21 million, then you debit non-personal advances. So if you credit 21 million to Ministry of Health expenses, that will reduce the expenses under Ministry of Health. The corresponding debit entry will be non-personal advances, which will appear as a current asset in the statement of financial position. So then the second asterisk, you were told there were some falsifications in the bills for items bought for the provisions of water under other charges. This is also another item, and that is other charges. That means you were told it was falsified. There were falsifications. The total discrepancy amounting to 9 million naira. If there were this falsification of other charges, that is to show that other charges too were inflated by 9 million. In order to reduce the expenses, that is the other charges. Remember, normally expenses should have a debit balance. In order to reduce it, you credit other charges. No expenses has a debit balance. So credit it in order to reduce it, then debit no personal advances. That means the 21 million and the 9 million, which has been debited as non-personal advances, the total 30 million will appear as non-current asset in the statement of financial position. The 21 million has been credited to Ministry of Health in order to reduce the expenses under Ministry of Health. Then the debit entry is non-personal advance. Then we also have 9 million, which has been credited to other charges in order to reduce other charges. Expenses has a debit balance. Since those expenses were inflated by 21 million and 9 million for Ministry of Health expenses and other charges. In order to reduce those expenses, you credit the expenses. It will reduce the amount you already have under the debit balance. If you reduce it, the debit entry will appear as non-personal advances. So we want to raise the journal entry. So the 21 million plus the 9 million, which is totaled 9 million non-personal advances, will appear as current asset in the statement of financial position. So the solution to A part of the question is the journal entry required. So we have journal entries. So this is a journal proper. So you have the credit side of the journal, you have the debit side. Debit side, we have credit side. Remember, amount is in million naira. It's in million naira. So I've told you, you debit non-personal advances, non-personal advances. So which will appear as current asset in the statement of financial position. Then you credit Ministry of Health expenses. You credit those expenses, Ministry of Health expense. And the amount, you were told that included in payments of the expenses under Ministry of Health were various duplicated vouchers amounting to 21 million. Since the expenses under Ministry of Health has been inflated by the duplicated voucher, it was recorded twice. That is the meaning. So, and it was inflated. Since the expenses was inflated, you credit it in order to reduce it. So, we credit the expenses under Ministry of Health with 21 million. Then we also have other charges. This is also another expenses. Other charges, and that is 9 million. So the total of this is 30 million. And this 30 million, you debit it as non-personal advances. 30 million. So which comprises of 21 million plus 9 million. Total 30 million. That is how we arrive at the 30 million. Then that is the solution to the A part of the question. In the B part of the question, you have to prepare the statement of financial performance. So you want to prepare the statement of financial performance. The name of the local government is Tadepe Local Government Council. Tadepe Local Government Council. So we want to prepare statement of financial performance for the year ended. The year end of the entity is December 31st, 2024. December 31st, 2024. So, this is the statement of financial performance. Amount is in million naira. Million. Then you have the code. Let me say code, then they have description. The code, the description, and the amount. From the additional information number 2, you were told code 2 is used as prefix for revenue. And we are starting with revenue item. That means the items you'll be looking for are items of revenue. That is those ones that start with code number 2 based on the information provided in the note 2. So this is revenue, but this is 30. So let's look at the first. We arrange it. This is 50, this is 60, this is 40, this is 10. I think 10 should be the first item of revenue. So which is code 20010. That will be the first item of revenue there. 20010. And the item is statutory allocation from federal government of 148.5 million. Statutory allocation from federal government, and that amounted to 148,500. There are no additional information on statutory allocation. That is why the amounts given in the question was recorded directly. After code 20010, the next item of revenue is code 20020. Code 20020. And that is for state internally generated revenue. State internally generated revenue. And that amounted to 24,690. There is no additional information on that. So we record the amount 24,690. Then after 20020, the next revenue item is code number 20030. 20030, which is for licenses and fees. Licenses and fees. Working number 1. We have additional information as regards this, and we equally have receivables in respect of licenses and fees in the trial balance. So that is why this will be adjusted. Working number 1, which is for licenses and fees. Licenses and fees. Amount received. How much was received in respect of licenses and fees? So if you that is code 2030, we have 390 million. 390 million was received as licenses and fees. If you go back to the trial balance, you will see a license and fees, that is receivables, in respect of licenses and fees. Now, in the trial balance, you were told receivables. We have rates, we have licenses and fees of 180. The licenses and fees of 180 is the amount due in respect of the previous year. If you look at this trial balance, it's for 2023. The trial balance is for 2023, but you are preparing financial statement, that is statement of financial performance for 2024. So it means all the information you have in the trial balance relates to 2023, December 2023. Now, your financial statement is for 2024. That shows that the licenses and fees you have in the trial balance relates to the previous year, that is for 2023, which was received in 2024. That is why this 180 will have been included in the amount received in 2024. Since it is included in the amount received in 2024, only the items of income and expenses or income and expenditure or items of revenue and expenditure that relates to 2024 are the ones that will appear in the statement of financial performance. Only items of revenue and expenditure that are pertaining to 2024 financial year will appear in the statement of financial performance for 2024. So this 180 you have for licenses and fees for 2023 will have been included in the amounts received in 2024. So I've told you the information that will appear in the statement of financial performance for 2024 are those that relates to 2024. So you have to subtract the one prior year receipt, that is the amount received in respect of prior year, which was found in the trial balance of 180 million. So if you subtract that 390 minus 180, then you have 210. This 210 is the amount received for current year receipts. This is the amount that relates to 2024. But how much is due for 2024? How much is supposed to be received in respect of 2024? Now go through the additional information. So you were told local licenses and fees 450. The question note 4 is telling you that the following agreed revenue demand notices were sent to the indigenes of the state during the year. Local licenses and fees of 450. That is the amount that is supposed to be received for 2024 financial year. If you are supposed to receive 450 for 2024 and the 210 were actually received, amount supposed to receive, that is 450. It is the amount that relates to 2024 of 450 that will appear in statement of financial performance. statement of financial performance. Let me put performance so that you will not confuse it with financial position. Performance. It is the amount that relates to 2024 that's supposed to appear in the statement of financial performance. So, but only 210 were received. That means certain amount were due for receipt which have not been received. So 450 minus 210, then you have 240. This 240 still relates to 2024, but it have not been received. That will appear as receivables. That is statement of financial position. This 240 will appear in the statement of financial position under current assets as receivables. That is accrued income, which is an asset. So you have the 240 as receivable under the current asset. So we have 2030. So working one, which is 450. It is the 450 that will appear in the statement of financial performance as revenue. After 2030, which is for licenses and fees, then the next revenue item is 2040, which is sale of land. 20,040. That is sale of land. Sale of land is a capital item. So, and the amount given here is the proceed. Anytime an asset is sold, that is capital item is sold, the amount that will be recorded as revenue in respect of the capital item will be the profit. So we have profit from sale of land. Let's have that as working number 2. Working number 2, which is a working showing the profit from the disposal of land. So go through the note. Let's go through the note 6. Note 6. In note 6, you were told included in the payments under works and housing is the cost of land, including construction of access roads, certificate of occupancy, etc., amounting to 300 million naira. So the cost of the land is 300 million. So when the land were acquired, it cost the entity 300 million. The land was acquired by the state government and sold to local prospective landowners at a cost of 1,560,000 per plot. Each plot was sold for 1,560,000. The land consists of 200 standard plots. So altogether, the number of plots are 200. That means this 300 million being the cost of the land is the cost of the 200 plots. And a plot was sold for 1,560,000. 200 standard plots for the construction of houses of their choice. Only 150 plots. Only, remember, the number of plots were altogether 200. Now you were told that only 150 plots were fully subscribed and paid for during the year. That means 150 plots were sold. Now let's have working number 2. Profit from sale of land. Sale of land. You remember, a plot was sold for 1,560,000. So we have the proceeds. 150 plots were sold. So the proceeds will be 1,560,000, which is the amount realized from sale of one plot. and the number of plots sold is 150 plots. Out of 200 plots, 150 plots were sold. 1,560,000 times 150. That gives us 234 million. 234 million. That is the proceeds from sale of the 150 plus. And that is how they arrive at the sale of land under 20040 code here. Sale of land of 234 million. So the 234 million was the proceed. 1,560,000 realized from the sale of one plot times the number of plots sold, which is 150, which is 234. Now, how much is the cost? Less cost. Cost of the land. Remember, the cost of the entire land is 300 million naira from note 6. But of the 300 million, 300 million, that's the total cost of 200 plus. Only 150 plus were sold from the 200 plus. 150 plus out of 200 plus times the cost of the entire land. Cost of the entire 200 plus. So this will give you the cost of 150 plus, which were sold in the period. 150 divided by 200 times 300 million. So we have 225 million. The 225 million is the cost of 150 plus, which were sold in the period. If you subtract the 225 million from 234 million, being the proceeds, you have 9 million. This 225 million, 150 over 200 times 300 million, that gives us 225 million. And the 225 million is the cost of 150 plus sold from the 200 plus altogether. Remember, the proceeds of 150 plus is 234 million, and it did cost 225 million. So you have profit of 9 million. Profit from disposal of land. Disposal is 9 million. So that 9 million is the amount that will be recorded as revenue in the period. So we have revenue of 9 million naira, being the profit from disposal of 150 plus of land. After code 20040, we have code 20050. Code 20050, which is for rates. So that is for rates. Now, and we have 450 million naira there. Working number 3, and that is for rates. Then the amount received as rate is 450 million. Rates received in the period that amounted to 450 million. Then you have to go through the statement of financial position in order to ascertain if there is any rates relating to prior accounting period which were included in the amount received in the period, and that will be found in the trial balance if any. Now, in our trial balance, we have rates which was recorded as receivables. It was receivables in 2023 because it relates to 2023 and it was not received as of then. That is why you have it as receivable. Now, it were now received in 2024. So that means of 450, 300 million relates to prior accounting period. The 300 million you have as receivable in the trial balance relates to the previous accounting period which was received in the year. So we have rates. Prior year rates received or receivable, and that is 300 million. And this 300 million is found in the trial balance. If you subtract the 300 million, then you have 150 million. It means of the 450 million received in the period, in the year, only 150 million relates to the current year. Rates, current year rates received, and that amounted to 150 million. Then how much is the rate due for the current year? The current year's rate, that is what you have as local rates, 555 million, is the amount of rate you're supposed to receive. So you have current year rates, or let me put local rates. Local rates due 555. That is the amount you're supposed to receive for the current year. Only 150 million were received. That means the balance is outstanding or receivables. These receivables in the period will appear in the statement of financial position. So, which is the balancing figure? 150 minus 555. That is 405. It is the 405 that will appear as receivable under current asset in the statement of financial position. It is the amount relating to the current period that will appear in the statement of financial performance, which is 555. This is statement of financial performance, 555. So we are going to record the 555 as the rates for the period in the statement of financial performance. So we have rates of 555. That is working number 3. We have that as 555. Then after code 2005, so you go back to the duties. So the next code is code 2006. That is what we are going to have. We have 2006. That is the next code. And that is rent of government property. Rent of government property. So let's go to the trial balance. So do we have anything relating to rent of government property? Working number 4, which is for rent of government property. Then the rent of government properties, that is 2060, and that amounted to 480. Amount received. Received 480. 480 was received in the period. Now, back to the trial balance. In order to ascertain if there is any rent received that relates to the prior accounting period. So we have rent of government property. Rent of government properties of 150 million. The 150 million relates to 2023. That means the 150 million is included in the amount received in 2024. So since it relates to 2023 and it was included in the amount received in 2024, you have to remove it from 2024 rent. So in order to know or to ascertain the amount relates to 2024. So now we subtract prior year rent received. The rent of government property received that relates to prior year, which is found in the trial balance of 150 million. So if you subtract the 150 million from 480 million, then you'll be left with 330 million. 330 million. That is current year rent received. This is the amount that relates to the current year in the amount received. Then you have rent on state government properties of 516. The amount due for 2024 is 516 million. 2024 rent due. 2024 rent due is 516 million. Of the 516 million, 330 million were received. The 560 million received will be reported in the statement that is due. The amount due is what will appear in the statement of financial performance. So the amount due not yet received, 330 minus 516, that gives us 186. This 186 million will appear as receivable in the statement of financial position. Rent receivable. That is statement of financial position. This will appear as receivable under current assets in the statement of financial position. So the 560 million is what will appear in the statement of financial performance. So we are going to show the 560 million in the statement of financial performance as the rent rent due for the period. That is working number 4. Working number 4. Working 4. And that amounted to 560 million. Then after code 2060, the next code is code 2070. And under code 2070, what do we have there? 2070. And that is share of value added tax. 2070. That is for share of value added tax. Do we have any notes on that? That is not in the trial balance. And then we do not have anything relating to that in the statement of in additional information as well. So since it doesn't have any notes, there is no note relating to that. So we record the amount we have here, which is 72 million. 72 million. After code 20070, the next code, the revenue code, is code 20080. 20080, which is other grants. Other grants. There is no additional information as regards other grants. So we have 1,680,000. So we record it. 1,680,000. Then after code 20080, the next revenue item is code 20090, which is miscellaneous receipts. Code 20090, miscellaneous receipts. There is no note on this as well. So the amount we have is 183 million. 183 million. After code 20090, let's check if there is any other revenue item which have not been considered. Remember, revenue start with code 20. So there is no other item of revenue in which code is attached. The only item of revenue left is the capital grant in note 8, and no code is attached to that. So we have capital grant from the federal government was received on December 31st, 2023. Since it was received in 2023, that means it will be found in the Trabala 2023 Trabala and utilized in 2024. Since it was utilized in 2024, that means it will appear in 2024 financial statements. So now let's go through the Trabala 2023 Trabalas in order to ascertain the capital grant which was received in year 2023. So how much is the capital grant? So now in the Trabala 2023 Trabalas, we have capital grant from federal government 450 million. Capital grant from the federal government of 450 million. So that will be recorded. So no code is attached to that. So we have capital grant from federal government, and that amounted to 450 million. So now we can sum up the revenue in order to ascertain the total revenue for the 2024 financial year. So we want to total it now. So we have 148.5 billion and 48,500 plus 24,690 plus 450 plus 9 plus 555 plus 516 plus 72 plus 1680 plus 183 plus 450. So we have 177,105. That is the total revenue for the year. So total revenue, we have 177,105. After revenue, we consider the expenditure. What are the items of expenditure given in the question? So the item of expenditure: 30/40, 30/50, 30/60, 30/30. 30/30 will come before 30/040. So the first expenditure code is 30/030, which is Consolidated Revenue Fund charges of 318. And there is no additional information about this. No notes affect the CRF charges. So we have consolidated, that is 30/030, which is Consolidated Revenue Funds charges. Consolidated Revenue Fund charges of 318. 8. Code 30040, which is personnel emolument of 55,230. So personnel emolument. Personnel, which is 30040. Personnel emolument. And we have additional information on this. So the amount paid, in respect of that, let me have this as working number 5. Working 5, which is for personnel emolument. Personnel emolument. Amount paid. Amount paid is 55,230. 55,230. Now, back to the note. Note 11, that is XI. So from note 11, we have the following expenses were incurred but not settled as at end of the year. Consultancy, that is finance department, of 45. Utility, which is other charges, 18. Repairs and maintenance of 27. We have salaries and wages, which is personnel department, of 69. So that means 69 was due in respect of salaries and wages for the period which have not been settled. That means that is an accrual. So an accrual should be added since accrual basis IPSAS is used. Accrued salaries and wages of 69 million. If you add 69 million to 55 million to 30,000, there you have 55 to 99. 99255. 55 to 99. And this will be recognized in the statement of financial performance. So we are going to recognize 55 to 99 in the statement of financial performance in the period. So we have that in working note 5, working 5, which is 55 to 99. Then after this, the next item of expenditure after 30,040, 30,040, then we have 30,050, which is Ministry of Finance, 39,300. 30,050, 30,050, which is Ministry of Finance. So let's have that as working. I think we have a note on that. Let's check first. Then if you go through the additional information, do you have any? Okay, note 7. Note 7, and that relates to Ministry of Finance. You were told, included in the payment under Ministry of Finance is the cost of office stationery of 75 million. While the value of office stationery based on inventory sheet as at December 31st, 2024 was 19.5 million naira. So you were told the stationery was included in payment under Ministry of Finance is the cost of office stationery of 75 million. We have to remove the 75 million because it relates to stationery, and that will be added to item of stationery for the period. So we want to subtract 75 million. Aside this, do we have another item of expenditure that relates to the Ministry of Finance If there is none, so we will recognize that in the statement of financial performance. So we have 30050. Let me have this as working number 6. Ministry of Finance. Amount paid 39,300 was paid. 39,300. Then, if you go through the additional information number 7, you were told included in the payment under Ministry of Finance is the cost of office stationery of 75 million. The office stationery was not incurred by the Ministry of Finance. So since it was included there, you have to remove it from there. So office stationery of 75 million. We have to subtract that. Now, in additional information number 11, we still have information that relates to the Ministry of Finance. We have the following expenses were incurred but not settled as at the end of the year. Those expenses were incurred and were not settled at the year end. Consultancy, Finance Department 45, and then we also have Insurance, Finance Department 16.5. Since those expenses were incurred but not yet settled, we have to add them. So, see, those ones that were incurred by the Finance Department, we want to consider them in Finance Department. So, we have consultancy. We have 45. Accrued, we add it. We also have insurance. Insurance was incurred by the Finance Department. Insurance of 16.5. So since they were outstanding, that is accrued, we add it. Now, let's go through the 2023 trial balance. Insurance relates to Ministry of Finance based on what we have in additional information. So we have prepayment insurance 24. Remember, this 24 is found in 2023 trial balance. Remember, we used to deduct prepayment. The prepayment we used to deduct is the one that relates to the future period. So now, for instance, since the financial statement is prepared for 2024, if there are expenses relating to 2025, which was paid as of 2024, you have to subtract that because it doesn't relate to 2024. Now, but the prepayment insurance you have in the trial balance relates to the previous accounting period. It relates to 2024. This prepayment insurance relates to 2024, but was paid in the previous year. Since it relates to 2024 and was paid in the previous year, that is why it was reported as prepayment in the trial balance, in the 2023 trial balance. Bearing in mind that the statement of financial performance we are preparing is the statement of financial performance for 2024. And this insurance was paid in 2023. It is 2024 insurance, which is supposed to be paid in 2024, but it has been paid upfront. It has been paid upfront in 2023. So since it was paid upfront, then we have to add these prepayments. So don't confuse it. If you want to deal with prepayment, subtract the prepayment in the closing entries. add the prepayment in the opening entries. This is opening because it's the trial balance here relates to 2023. You add the prepayment you have in the trial balance for 2023. But if you have prepayment at the end of the year, you are going to subtract that. Let me just take it that way. So please bear that in mind. So this insurance prepaid of 24 million will be added. So we want to add the insurance prepaid. It is because it relates to 2024, but which was paid in 2023. So we have insurance prepaid. Insurance prepaid. And that amounted to 24 million. So why are we adding this 24 million? Because it relates to 2024 financial year, but was paid in 2023. Accrued expenses. And among the accrued expenses, we have consultancy. And remember, consultancy also relates to Ministry of Finance. So consultancy of 45. These accrued expenses, it means since it is in the opening entry, that means this 45 million relates to the previous year, and it was not paid in that previous year. It relates to 2023. That is why we have it in 2023 trial balance. But in 2023, it was not paid, and it is now included in the amount paid in 2024. So in that case, you subtract. We used to add accrual. It is the closing accrual that will be added and subtract the opening accrual. So this is the opening accrual now. So we have to subtract it. Remember, one accruals have been added earlier. The one which was added relates to the opening entry. So we have consultancy. $45 million. We subtract the closing accruals. So after this adjustment, you arrive at the amount that will appear in the statement of financial performance. And that amounted to 39,265.5. This will appear in the statement of financial performance. So we have Ministry of Finance of 39,265.5. 39,265.5. Then after that, the next item of expenditure is Ministry of Education. That is 3060. Ministry of Education 30060. Ministry of Education of 132. So we have Ministry of Education 30060. Ministry of Education. So before that amount is recorded, that is 132 million is recorded, let's go through the additional information in order to ascertain if there is any note on expenditure incurred by the Ministry of Education.
There are no additional information on Ministry of Education. So we have 132 million naira as expenditure incurred by Ministry of Education. 132. We have 30,020, Office of the Secretary of the Government, 99. So that Office of the Secretary to the Government of 99, so that ought to have been written if this were to be arranged sequentially. 30,020 is the code. 30,020, which is Office of the Secretary to Government. and we have 99 million. That's supposed to be number one. Ministry of Health, that amounted to 261. So Ministry of Health 261. Do we have any additional information on this? So Ministry of Health 30070. Ministry of Health. So
After 30070, which is for Ministry of Health, the next one is 30080, which is Agriculture and Water Resources, 126 million. So now let's include that. 30080. I will go back to this working. Let me have this as working number 7. So then the 30080 is Agriculture and Water Resources. Agriculture and Water Resources. Agriculture and Water Resources amounted to 126 million. There are no additional information on that. So we have 126. So I will still do data of Ministry of Health. Then the next one, go back to the list. The next item is 30090, which is Ministry of Works and Housing. 30090. 30090. Ministry of Works and Housing. Let me have this to the working 8. So I will do working 8 before I go back to working 7. Now, how much is the expenditure
here in Ministry of Works
and Housing, which is 30090? That is 6,438. That is the amount paid in the Ministry of Works and Housing. Working number 8. Working 8 for Ministry of Works and Housing. Remember, I've not done the working number 7. So we have amount paid. Amount paid is 6438. 6438 was paid. 6438. Now, we have a note on this. 6438. Now, let's go through the list, through the additional information. Additional information number 5. We have included in the payment under Works and Housing is the cost of motor vehicles of 75 million. So it means this 75 million have been included in the amount paid. Included in payment under Works and Housing is the cost of motor vehicles of 75 million. The cost of motor vehicle is a capital expenditure, not a revenue expenditure. So we have to remove that. Motor vehicle cost of motor vehicle of 75 million. So we have to remove that. Then let's continue that same note. So why medical expenses, why medical equipment costing 105 million was included in the Ministry of Health expenses? Okay, so that means this one will affect the Ministry of Health. Now, note 6. Included in payment under Works and Housing is the cost of land, including construction of access roads, certificates of occupancy, etc., amounting to 300 million. You were told the cost of land is equally included, and the cost amounted to 300 million. cost of land, including construction of access roads, certificate of occupancy, etc., amounting to 300 million. These are also included. Remember, this is capital expenditure. The land was acquired by the state government and sold to local prospective landowners at a cost of 1,560,000 per plot. The land consists of 200 standard plots per for the construction of houses of their choice, only 150 plots. So now, the cost of land of 300 million included have to be subtracted as well. So we want to remove the cost of land. Cost of land, that is 300 million. So because that is also a capital item, it's a capital expenditure. Repairs and maintenance under works and housing are 27. Remember, you were told the following expenses were incurred but not settled as at the end of the year. Since they were not settled, the expenses were incurred and not settled. That means it remained accrued. Accrued expenses, because it relates to that year but have not been paid. Accrued expenses for the year or amount due that have not been settled or paid will need to be added to the expenses incurred for the year, since it is part of the 2024 expenses. So we have accrued expenses. Accrued expenses, that is in relation to repairs and maintenance. Repairs and maintenance. Accrued. And that amounted to 27 million naira. Now, how much will now appear in the statement of financial performance? So, we have 6438 minus 75 minus 300 plus 27. We have 6,090. 6,090 will appear in the statement of financial performance as an expense for the year. So, now we have 6,090. 6,090. Then after 30,090. So the next item of expenses, the code is 3100. 3100. The 3100 is expenses incurred in Ministry of Commerce and Industry. Don't forget, we've not calculated the amount that will be expensed in relation to Ministry of Health. Let me do that before we proceed to the next one, which is for Ministry of Health. Amount paid. How much was paid in respect to Ministry of Health? And that amounted to 261 million. So 261 million was paid in the year. 261. Then in the additional information, number 5, note 5. So you were told, included in the payment under works and housing is the cost of motor vehicles of 75 million. So this is Ministry of Health, not works and housing. While medical equipment costing 105 million was included in Ministry of Health expenses. Medical equipment is a capital expenditure. So since the expenditures of capital nature, they ought to be capitalized as part of the non-current asset. Since they were included in the Ministry of Health expenditure, we have to remove it from there. So we have medical equipment of 105 million. Medical equipment of 105. So you remove it. So if you subtract that, 261 minus 105, then you'll be left with 156 million. Since there are no further notes on that, so that means the 156 million will be expense in the statement of financial performance. 31, after 3120, we've used this. Then we have 3130. That is the next item, which is other charges of 33 million. And that is for other charges. Other charges. How much was paid? Amount paid as other charges. Now, let's go through the list. 33 million was paid as other charges. So that is the amount paid, 33 million. So we have 33 million. Back to the additional information. So do we have any note there? We have utility. So
We were told
other charges. Utility. That is, in the following expenses were incurred but not settled as at the end of the year. Consultancy, this is finance, or utility, other charges, and that amounted to 18. So since it is accrued, we add accruals.
we have accruals of 18 million.
That is for utility, which is accruals, which is 18 million. Now, aside that, do we have any other additional information that have to do with
other charges? Remember, utility is
treated as part of other charges. Now, the previous years trial balance, we have accrued expenses, consultancy, then utility bills of 27 million. So the utility bills of 27 million will need to be subtracted. Why? You know it's accrued. And this accrued is the amount due in 2023. That is, that amount relates to 2023. It is supposed to be paid in 2023. It was not paid in 2023. So, and it is included in the amount paid in 2024. Since it doesn't relate to 2024, since it didn't relate to 2024, we have to subtract that. Utility. Accruals. 2023. And that amounted to 27 million. We subtract the opening accruals. We add the closing. This is 2024 accruals. 2024, the closing. That of 2023, we remove it. Because the statement of financial performance relates to 2024. The accruals for 2024 relates to the year, so you add it. The one for 2023 is for the previous year, included in the amount paid, included in this 33 million. That is why we are subtracting the 27 million from it. Now, aside that, do we still have any other additional information that affects the other charges? We have falsification of 9 million, which we've raised a journal for that. And that is part of, I think, note 1 or 2. So we have this 9 million, that falsification. So, which was credited to other charges. Being credited to other charges, that means you have to reduce the other charges and then you debit the non-personal advance. So we would deduct that 9 million from other charges since it was credited. No other charges is an expenses, and expenses should have a debit balance. So since the falsification was credited in the journal, falsification, that means you are reducing the expenses by that 9 million. So how much will be recognized in the statement of financial performance? 33 million plus 18 million minus 27 million minus 9 million. So you'll be left with 15 million. That 15 million will be recognized in statement of financial performance. So statement of financial performance, so 15 million. So we want to recognize that. That is code. That is the code is 3130. 3130, which is for other charges. Work number 9. And that amounted to 15 million naira. So after 3130, do you still have any other unrecognized expenditure? So there are none other except for capital expenditure. You know, the capital expenditure is of course an asset. So an asset should not appear in the statement of financial performance. Rather, they will be used in the statement of financial position. The next thing to charge is the depreciation. We want to charge depreciation. Aside the depreciation, we have office stationery. The office stationery doesn't belong to either of the revenue head. From those 7, we have stationery. It doesn't belong to any of the head. So we want to include those expenditures that are not attributable to a particular head. Included in the payment under Ministry of Finance is the cost of office stationery of 75 million. It's a revenue expenditure, while the value of the office stationery on inventory sheet on 31st December 2024 was 19.5 million.
You were given the following depreciation rates for the property, plant and equipment. Motor vehicles at 20%, building at 2%, furniture at 10%, equipment at 15%, plant and machinery at 15%. You were told, note, all non-current assets were purchased at the beginning of the year. If the non-current assets were purchased at the beginning of the year, that means a full year depreciation will be charged on non-current assets acquired in the year. That is the essence of this clause. Since they were acquired at the beginning of the year, that means any non-current asset acquired during the year, you are going to charge full year depreciation on them. So we want to charge depreciation based on the rate given in the question. Depreciation. So you have the motor vehicles. The rate of depreciation of motor vehicle is 2%, is 20%. So you are going to calculate 20% of the cost of the motor vehicles. Then we have building, and the rate of depreciation on building is 2% of cost. Then we have furniture, and the depreciation rate of furniture is 10%. Then we also have equipment with 15% rate. Then we also have plant and machinery with the rate of 15% as well. These are the depreciation rates given in the question. So we want to use those rates to charge depreciation on the asset. For the purpose of calculating depreciation, we have the following non-PPE. Motor vehicles of 15 million. Land and building, the land is 15 billion, and that is 60 billion. Furnitures of 1.5 million, and then equipment of 7.5, and plant and machinery 15. So these are the property, plant and equipment. So before we even calculate depreciation, please let's prepare the schedule of property, plant and equipment so that we'll be able to post from there to our PP, our depreciation. So now let's have schedule of property, plant, and equipment. One, two, three, 4, 5, 6. Our property, plant, and equipment include motor vehicles, Then we also have land and building. Let me separate it. Land. Let me separate building from land. Then equipment. Then we also have plant and machinery. We also have furniture. Naira and M. So now back to the trial balance. So remember, the trial balance was prepared for 2023 rather. That means the balances you have in the trial balance relates to the opening entry. You have motor vehicles 15 million, land and building including land of 15 billion. If you separate 15 billion from 60 billion, because this total is for land and building together, if you remove 15 billion from 60 billion, that means land will be 15 billion while building will be 45 billion. Furniture 1.5 billion, equipment of 7.5 billion, and plant and machinery of 15 billion. You have opening balance brought forward. So the motor vehicle is 15 billion. Then land and building. You were told land is 15 billion. It is indicated. I remember the total cost of the land and building is 60 billion as given in the trial balance. If you subtract the cost of land of 15 billion from 60, then you'll be left with 45 billion. That is for building. This 45 billion is 60 billion given in the trial balance minus 15 billion given for the land. And that is how I got 45 billion. The equipment is 7.5 billion as given in the trial balance. Plant and machinery is 15 billion as given in the trial balance. And furniture is 1.5 billion as given in the trial balance. Now, if you go through the list item of expenditure, you have capital expenditure. That is 40,000, which is capital expenditure of 786. And in the note 9. From note 9, you were told that the capital expenditure, note 9, the capital expenditure paid during the year was for the acquisition of land for the new state government, for the new state general hospital. So since it was incurred in acquisition of land, we have that as addition. So, and that capital expenditure is code 40,000, which is capital expenditure of 786. So that is the land acquired during the year. So we put that under land, 786. 86 billion. Now, back to the note 5. In note 5, you were told included in the payment under one's housing is the cost of motor vehicles of 75 million, while medical equipment costing 105 million was included in the Ministry of Health expenses. So those are the capital expenditure incurred during the year. So we are going to add 75 million to motor vehicles and 105 to equipment. So now back to the schedule of property, plant and equipment. Motor vehicles 75 million. Then medical equipment of 105 million. That is equipment. So this will be added. That is addition. Those one acquired during the year. So if you sum up this, there you have 15,075. This is 15,786. And this is 45,000. This is 7,605. And this is 15,000. This is 1,500. So that is the balance. That is as at 31st December 2024. So after that, the next section is the depreciation section. Depreciation. How much is the prior year accumulated depreciation? The prior year accumulated depreciation chart in respect to each of the assets will be found in the trial balance. You have accumulated provision for depreciation PPE. Motor vehicle 3 billion, building 6 billion, furniture 108 billion, equipment of 75 billion, plant and machinery of 1.5 billion. So we want to record this in the schedule of property, plant and equipment. So we have for motor vehicles 3 billion, for building we don't depreciate land, building 6 billion, then furniture 108 billion, furniture 108 billion, then equipment of 75 billion, equipment 75 billion, then plant and machinery 1.5 billion. These are the depreciation chart in the year. Brought forward from the prior year. Then how much will be the depreciation that will be charged in the year? So we want to calculate the depreciation that will be expensed in the statement of profit or loss. So that is charged. Depreciation chart in the year. Chart in the year. To get the depreciation charge in the year, you apply the depreciation rate on the total cost, 15 billion and 75 million. That is for motor vehicle, 15 billion and 75. Then what is the rate of depreciation to be used on motor vehicle? The motor vehicle rate is 20%. Calculate 20% of that. 20% of 15 billion and 75 million. So 20% of that gives us 3015, 3 billion and 15 million. Then we don't use to depreciate land. The next one is building, 45 billion. What is the rate of depreciation used on building? The building rate is 2%. Apply 2% on the cost of the building. And the cost of building is 45 billion. What is 2% of 45 billion? That gives us 900 million. After building, we have equipment, 7,605 million. And what is the rate of depreciation to be used on equipment? Equipment rate is 15%. So you calculate 15% of the cost of so 15% of 7,605 million. That gives us 140.75. Then on plant and machinery, 15 billion. The rate of depreciation of plant and machinery is 15%. 15% of 15 billion. That gives us 2,250 million. On furniture, 1.5 billion. And the rate of depreciation of furniture is 10%. So if you apply 10% of 1.5 billion, that will give you 150,000. So we have that to be 150,000. Then you sum up this to get the accumulated depreciation. So accumulated depreciation for as at the reporting date. So accumulated depreciation. Let me have this to be B and the cost to be A. So this will be 6015. This is 6900. This is 75 plus 1140.75. That gives us 1215.75. Then 1,500 plus 2,250. That gives us 3,750. This is 108 plus 150. And this is totaled 258. So carrying amount now will be cost less accumulated depreciation. Cost less accumulated depreciation will give you carrying amount. Carrying amount. And the cost is A minus accumulated depreciation of B. A minus B. So we have 15,075 minus 6,015. This gives us 9060. This one minus N will be 15,786. 45,000 minus 6,900. This gives us 38,100. This is 7,605 minus 1215.75. That gives us 6389 Then 15,000 minus 3750. That is 11,250. Then 1,500 minus 258. So we have 1242. So these are the carry amount. The depreciation charge in the year will be expense. That is the amount that will be charged as an expense in respect of the yearly depreciation. So we have For how much is the depreciation charge in the year? For motor vehicle, we have 3015. So let me just use the figure from the schedule of PPE. So if we have the workings for depreciation working number 10, let's have the schedule of PPE to be working 10. Working number 10. So motor vehicles 3015 from the schedule of PPE. Then building 900. Building 900. Then equipment 1140.75. Equipment 1140.75. Then plant and machinery 2250. 2250. Then furniture 150. So if you sum up the depreciation, you have 3015 plus 900 plus 150 plus 1140.75 plus 2250. The depreciation is totaled 7455.75. 7455.75. That is the total depreciation charge in the year. So the next item is office stationery, working number 11. Office stationery. We have certain amount in the prior year trial balance. So we have that as balance brought forward. How much is office stationery in the 2023 trial balance? So inventories. We have inventories, office stationery of 12 million. So that is the amount I have as balance brought forward. Inventory of office stationery of 12 billion naira. So we have that as balance brought forward. Now back to the additional information number 7. So we have number 7. We have included in the payment under Ministry of Finance the cost of office stationery of 75 million. So the one acquired during the year is 25 million. While the value of office stationery based on inventory sheets at December 31st, 2024 was 19.5. So we add this, subtract the closing. The closing will be recorded as current asset in the statement of financial position. So we want to add the 75 million which was acquired in the year and deduct the closing balance. So we have acquisition. Let me say catch 75 million. If you add this, you have 787 million. Then we now have the closing balance. Closing balance, which is note 7. Okay. Everything is found in the additional information 7, yes. And that amounted to 19.5 million. This one too, the acquisition is also in note 7. Note 7. So if you subtract the closing balance, 87 minus 19.5, then you'll be left with 67.5. It is this 67.5 million that will be recognized in the statement of financial performance. So we have statement of financial performance. So 67.5 million. So we want to recognize that. So we have office stationery working 11. Office stationery working 11. and that is 67.5 million. So we've done with all the items of expenditure. So we want to sum up the expenditure items. So in order to get the amount of surplus or deficit for the period. So if we take our calculator, we have 99 million. 99 plus 318 plus 55,299 plus 39,265.5 plus 132 plus 135 plus 126 plus 6090 plus 114 plus 42 plus 654 plus. So want to continue. So we have plus 15 plus 74. The addition of all this is 7455.75. 7455.75 plus 67.5. All the expenditure is total 109. Total expenditure 109 812.75. 812.75. 109,812.75. So the total revenue amounted to 177,105,000,000. And if you deduct the total expenditure of 109,812,750,000. If you deduct it from the total revenue, total revenue 177,105 minus total expenditure 109,812.75. Then you have the surplus. We have surplus of 67,292.25. 292.25. Now, if you go back to the trial balance for 2023, you have a balance there to be brought forward to 2024. The accumulated surplus or deficit for the year 2023. So we have accumulated surplus or accumulated net surplus or deficit 1,491. This is at the debit side. Being at the debit side indicates that the amount is a deficit. So it's a deficit. So we have accumulated net surplus slash deficit. So it's at the debit side of the trial balance. So that shows that it is a deficit 1,491. So we subtract deficit from the surplus. This is brought forward. So we now have accumulated surplus stroke deficit carried forward. So now let's subtract the deficit of 1,491. So we have the surplus of 65,801.25. That is the surplus that will be carried forward to the next accounting period. So we've done with the statement of financial performance. The next thing is the statement of financial position for the period. In the C part of the question, you have to prepare the statement of financial position. The name of the entity is Tadepe Local Government. Is it local government or state government? So whichever one you see in the question. Statement of financial position. Position as at December 31st, 2024. Amount is in million. So you start with non-current assets. Non-current assets. As part of our non-current asset, we have property, plant, and equipment. Property, plant, and equipment. The property, plant, and equipment include items such as motor vehicles. Then we have land. Then we also have building. Motor vehicles is 9060. That of land is 15786. Then building 38100. So we want to record the cost of those PP. So we have motor vehicle 9060. 9,060 million. Then land 15786. 15786. Building, and that is 38,100. Then we have equipment. Then we also have plant and machinery. Then we call it have furniture. So, how much is the cost of each of those assets? We have equipment of 6389.25. 6389.25. Then we have plant and machinery of 11,250. Then we have furniture 1242. What is the total cost of all the property, plant, and equipment in the asset register of the entity? So let's type. We have motor vehicles of 9060 plus 15786 plus 38100 plus 6389.25 plus 11250 plus 1242. So we have the total to be 81 827.25. This is the total non-current asset. Then after non-current assets, we have current assets. Current assets. Our current assets include receivables So if you go back to the list of items given in the question, then the items of receivable that can be found include the receivables in respect of licenses and fees. We have licenses and fees, that amounted to 240 from working one, which will be recognized in the statement of financial position. So we want to record the licenses and fees, receivables in respect of licenses and fees. That is from working one, then from working number one. Let me put naira a million. Receivables 240 million naira. Then after licenses and fees, we have receivables in respect of race, and that is obtained from working number two, and that amounted, working number three, that amounted to 405 million naira. We have receivables in respect of race of 405 million race. Working number three, and that amounted to 405 million naira. Then we also have receivables in respect of rent of government properties of 186 million naira. That is from working number 4, 186 million naira. That is rent of government property. Rent of government property. Rent of government property. That is working 4. And that amounted to 186 million. Then from the requirement A, where you are to open a journal entries, we have non-personal advance of 30 million. Non-personal advance. This is obtained from journal, from the requirement A. You have non-personal advance of 30 million naira. Then we have cash. So if you go back to the trial balance, this cash and cash equivalents relates to 2023. So which is the closing balance in 2023. I remember this statement of financial position is for 2024. So the cash and cash equivalent that will appear in 2024 statement of financial position is the one at the end of the year 2024. So the one given in 2023 trial balance is the closing balance in 2023, which will now be brought forward as an opening balance in 2024. And you are not given the cash book. You are not given cash book for 2024. Since cash book is not given, although there are items of receipts and payment relating to 2024. So the items of receipts and payments will be posted to the cash book in order to ascertain the closing cash balance, which will be used in 2024 statement of financial position. But before I consider that, then we have motor vehicle. Let me consider this, lest I forget. We have motor vehicles, which was bought for 300 million from note 6. Included in the payments under walls and housing is the cost of land, including construction of access roads, certificate of occupancy, etc., amounting to 300 million naira. So land that cost 300 million. Remember, it was not included in the land and building given in the 2023 trial balance. That is why you were told it is included under walls and housing. So it was included. If it had been part of the opening balance in 2023, that means the one sold would have been included as a disposal in the schedule of property, plant and equipment. If you look at the schedule of property, plant and equipment, we didn't have disposal because this land which was acquired was not included in the 2023 trial balance. It hasn't formed part of the opening balance. Of course, we even have an acquisition. The land was acquired. No, it is an acquisition of land. We didn't include it by the state government and sold to local prospective land owners at the cost of 1,560,000 per plot. The land consists of 200 standard plots for the construction of houses of their church. Only 150 plots were fully subscribed and paid for during the year. Remember, you have 200 plus altogether. Out of 200 plus, 150 plus were sold. If 150 plus were sold, that means you are still having you are left with 50 plus unsold. 50 plus were unsold at the year end. That 50 plus which were not sold, we will need to include it in the statement of financial position. So now let's have that as investment in land. Investment in land. Investment in land. Let me have that as working number 12. Working 12 for investment in land. Investment in land. So remember, you have working 12. Working 12, which is for investment in land. How much is the cost of unsold land at the year end? This is million. So the cost. Remember, you were left with 50 plus unsold out of 200 plus, and the entire 200 plus were acquired for 300 million naira. If 200 plus were bought for 300 million, out of which 150 were plus, 150 plus were sold, out of which 150 plus were sold, you were left with the unsold plots of 50. 50 plus were unsold. 50 divided by 200 times 300 million. And that gives us 75 million naira. This 75 million will be recognized as investment in land. Then that is how we got the 75 million. That is working number 12. Now, aside this, you have inventories of stationery that will be recognized in the statement of financial position. Now, from note 7, you were told included in payment under Ministry of Finances the cost of office stationery of 75 million naira, while the value of office stationery based on inventory sheet as at December 31st, 2024 was 19.5 million. So you have unsold inventory. You have inventory of stationery of 19.5 million naira left in the books. And that inventory which was left in the books will need to be recognized as current asset in the statement of financial position. So we have inventories of stationery. Inventory of stationaries. Stationaries. This is obtained from note 7. From additional information number 7, and that amounted to 19.5 million. Remember, I've told you that you have cash and cash equivalent given in the 2023 trial balance of 48 million. And this will serve as an opening entry when you are preparing cash book for 2024. So it is the closing balance for 2024 that will be recognized in the statement of financial position for the year 2024. Therefore, I want to include cash and cash equivalent. Let me have that as working number 13. Working 13. So we are starting with the opening balance of 48 million naira. So, and that will be 48 million naira will be posted to the cash book. So we have cash book, working number 13. Working 13. So that is for cash book. So you are starting with the opening cash book balance brought forward of 48 million naira. Then after that, you go through the note number 1, additional information number 1. So you want to record the items of revenue and expenses from there into the cash book. Now we are starting with revenue item. Listed below are the revenue and expenditure items for the year ended December 31st, 2024. So, I remember in note 2, you were told code 2 is used as prefix for revenue and 3 for recurrent expenditure. Anywhere you see 2, you know it is revenue. The first item of revenue is licenses and fees, 390. Licenses and fees of 390. Licenses and fees. $390 million. Then after that, the next item is rates. So we have rates of 450 million naira. Rates 450. After that, the next item is rent of government property, and that amounted to 480 million, followed by sale of land of 234 million. So I want to record the two items. Rent of government property of 480 million. Then we have receipt from sale of land, and that amounted to 234 million naira. So after that, so we've recorded this. Then the next item of revenue is statutory allocation from federal government of 148,500. Statutory allocation, followed by state internally generated revenue of 24,690. So we are starting with statutory allocation. Statutory allocation from federal government. That is 148,500. Followed by state internally generated revenue. State internally generated revenue. And that amounted to 24,690. 24,690. Then after that, so let's go back to the list. We have used this, then followed by other grants of 1680, that is 1,680,000,000. and then share of value added tax of 72 million. So we want to record those two items. So the first one is other grants. Other grants of 1,680 million, followed by share of value added. Share of value added tax, and that amounted to 72 million. Then after that, so let's go through the list of items of revenue and expenditure. So this is expenditure, this is expenditure. We have miscellaneous receipts, 183 million. That is the next item of revenue. We have miscellaneous receipts. Miscellaneous receipts of 183 million. Then if you go through the list, there are no other items of revenue that are yet to be used. Remember, revenue is preceded with code 2 and no item of revenue. That means we've done with all items of revenue in the list. So the next thing is to total them. What is the total? Total. We have 48 plus 390 plus 450 plus 480 plus 234 plus 148,500 plus 24,690 plus 1,680 plus 72 plus 183. We have 176, 727. So that is the total of all the revenue items. After revenue, then we want to consider the items of expenditure. Remember, the expenditure paid will be deducted from the revenue receipt to get the closing cash and cash equivalent for the period. So I want to start from the beginning again. The first item of expenditure is personnel emoluments of 55,230, followed by Ministry of Finance of 39,300. I want to record the two. So we have personnel emolument of 55,230, followed by Ministry of Finance. Ministry of Finance. And that amounted to 39,300. After this, back to the details. What is the next item of expenditure to consider? Remember, we've recorded the expenditure incurred by Ministry of Finance. The next code is Ministry of Education 132, followed by Consolidated Revenue Funds charges of 318. I want to record these two now. So we have Ministry of Education, Ministry of Education, and that amounted to 132 million. After Ministry of Education, we have Consolidated Revenue Fund charges, CRF charges. Consolidated Revenue Fund charges of 318. Back to the list. After that, the next item in the list is Office of the Secretary to Government of 99. Office of the Secretary to Government of 99. So I'm picking this. And the Ministry of Health 261. I'm picking this too. So we have Office of the Secretary, Office of the Secretary to Government, and that amounted to 99 million, followed by the expenditure in cure in Ministry of Health 261. Ministry of Health, and that amounted to 261. Then after this, if you go back to the list, after Ministry of Health of 261, what is the next item of expenditure? Remember, the Ministry of Health has been used. Then we have Agriculture and Water Resources of 126, and the Ministry of Works and Housing 6438. I want to record these two. So Agriculture, Ministry of Agriculture and Water Resources. Agriculture and Water Resources. And that amounted to 126. Followed by the Ministry of Works and Housing. Ministry of Works and Housing. The expenditure in cure in Ministry of Works and Housing, that is 6438. 6438. Then after this, the next item of expenditure we have in the list is Ministry of Commerce and Industry 114. Ministry of Commerce and Industry. Ministry of Commerce and Industry. Ministry of Commerce and Industry, that is 114. Then after this, the next item of expenditure we have in the list, so the next item of payment is other charges of 33 million naira. Other charges of 33 million naira. After other charges, the next item of payments we have in the list is miscellaneous payments of 654 million naira, followed by capital expenditure of 4 million naira. I want to record the two. Capital expenditure of 786 million. So I want to record these two now. So we have miscellaneous payments, and payments for capital expenditure. Miscellaneous. And that amounted to 654 million. Followed by payments for capital expenditure. Capital expenditure. And that amounted to 86 million. After payments for capital expenditure, the last item in the list is expenditure incurred in Ministry of Local Government and Chieftaincy Affairs of 42. Ministry of Local Government and Chieftaincy Affairs of 42 million. So we want to record that now. Ministry of Local Government and Chieftaincy Affairs of 42 million. So that is all the expenditure that are provided in the question. So we want to sum up the items of payments. I mean, that is all the payments. Payments is different from expenditure. Expenditure, let me say expenditure paid. What is the difference between, if you have expenditure, it is possible you might have an expenditure due that have not been paid. That is accruals. But the one paid is the one that will go into the cash book. So that is why I'm trying to let you know the difference between expenditure paid and expenditure due for the period 55 to 30 plus 39 300 plus 132 plus 318 plus 99 plus 261 plus 126 plus 6438 plus 114, then plus have 33 plus 654 plus 786 plus 42. Expenditure is totaled. I mean, all the payments is totaled. 103 533 103 533. If you subtract that from the total receipts, remember the total receipts is 176,724. Let's subtract the payments from that. 176,727. So you have 73,194. That is the closing balance. That is the amount that will be recorded in the cash and cash equivalent. 73,194. That is the closing balance. Balance carried down. So this will be recorded as cash and cash equivalent in the statement of financial position under current assets. So this is working 13. Cash and cash equivalent working 13. And that amounted to 73,194. This amount is obtained from our cash book. So if you subtract the current, if you sum up the current assets, so what will be the total of all our current assets? Plus 19.5, plus 75, plus 30, plus 186, plus 405, plus 240. The current asset is totaled 741,495. If you add the current assets and the non-current assets, current plus non-current will give you the total asset. Non-current asset plus current asset plus 81 827.25. So we have the total asset of 155 976.75. This is total assets. That is our total assets. After total assets, the next section of the statement of financial position is the equity and liability. So we want to consider equity. So we have net assets slash equity. So under the equity, if you go to the trial balance, 2023 trial balance, you have reserves of 90 billion. So we have reserves of 90 billion brought forward, 90 billion. Then from the statement of financial performance, we have accumulated surplus. Accumulated surplus brought forward. That is statement of financial performance. How much did we have as the surplus from our statement of financial performance? We have 65,801.25. 65,801.25. And this will be recognized under the net asset in the statement of financial position. 65,801.25. So if you sum up that, 90,000 plus 65,801.25, 65,801.25, that is total 155,801.25. Then we have liabilities. And the items of liabilities given in the questions include accrued expenses. Accrued expenses. Accrued expenses. If you go through the list, note 11. From note 11, you were told that the following expenses were incurred but not settled as at end of the year. They were not settled. It means they remain outstanding, they remain accrued, they have not been paid. That is the meaning. Since they haven't been paid, therefore those expenses will be recognized as liability. So we have consultancy, which is finance department of 45 million. So we have consultancy of 45 million. Consultancy $45 million. Then after consultancy, we have utility. And that is utility which have been included in other charges that amounted to 18 million. We have utility of 18 million. 18 million. After that, the next item is repairs and maintenance, which have been included in works and housing, 27 million. Then we have repairs and maintenance. Repairs and maintenance. And that amounted to 27 million. After that, we have salaries and wages of 69 million. Salaries and wages. Salaries and wages, 69 million. And the last one there is insurance, finance department of 16.5 million. Insurance of 16.5 million. Insurance 16.5. If you sum up all this, the total will be 45 plus 18 plus 27 plus 69 plus 16.5, and that is total 175.5. 175.5, the total for this. If you now add this to 155,801.25, the total will be 155,976.75. That is 155,976.75. That is total equity and liabilities. Total equity and liabilities. So if you compare this with the total asset, you will see that it agrees with the total asset we have in the question. The total equity and liabilities agrees with the total asset. So this marked the end of the solution to the question. Please drop the love emoji, like the video, and also share it with others. Thanks for watching ZICA.